did outline some of the rules that helped me kind of trade in a high volatility environment. You know, we've traded through to 2018, we traded through 2016, you know, traded through 2011. Well, not hit together, but you know, 2015, 2016 volatility, 2018, 2020. So what are some of the rules that I consider to keep, right, that helps me kind of deal with uncertainty in the market? One is to wait 2 to 3 days for trend change, right? Today is day, you know, 1, right? We had reversal yesterday. Today is day 1 of the after the reversal. You know, you want Monday and Tuesday to continue posting higher highs and higher lows, right? For the short-term trend change. That rule is extremely important to me. Do not break spreads on, you know, you want to be long and short the market, right? Because ultimately you don't know, but you know, by the end of the day, we might have a reversal, or Monday we might have a reversal. So you don't really know where the market is heading next. So it's important to have a spread. You know, you could be bullish. If you said 1, you can have a bull call spread. You know, if you said 2, you might have a bear put spread, but you want to be long and short the market at the same time with a certain opinion, right? Expressing bias. That's the advantages of these spreads. If you don't trade spreads, you do dollar cost average. You know, if you really want to buy Bitcoin because it's down 50% and you think it's going to call, you know, don't buy the entire position now for that 2.5% stop loss. Buy only half of that position. You know. Again, I encourage to consider 4 positions, 2.5%. So 4 position means you have to be extremely selective, right? You can't really buy Rivian, Bitcoin, and Amazon and Apple because that's all just one position, right? They're all going to move the same way. Or JP Morgan. You know, JP Morgan is down 22%. You know, Microsoft is down 22%. They're highly correlated. They're going to move in tandem. We talked about bias. Allow more time, right? If you think this is the bottom, right, the market is going to rally into June, July, don't buy June, July options because you know, this could be the bottom today, or yesterday could have been the bottom, or maybe the bottom will be next Friday, right? You don't really know, or maybe 2 Fridays from now. So then, if you do have an opinion, instead of buying June options, I encourage you go into September. You know, go to August. Give yourself more time. Allow more space, right? Allow more space. Looking at the, obviously Spiders 385 is the, you know, line in the sand right now. It's a 20% retracement. It separates mentally bulls from bears. You know, most people still think that we are in the bull market. So if Spiders drops below by 20%, then more and more people will believe that we are in a bear market, right? Right now, majority of the people think we're in a bull market by definition of 20%. So that will be a big mindset change. So 385 is your stop level. So just a little, give yourself more space. You know, if you think 385 is the bottom, you know, size this position, maybe then 375 is the bottom, right? So that means you reducing position size, right? So giving yourself more time, giving yourself more space. Again, you want to wait for volume and VIX confirmation, right? It could be VIX spiders. Sometimes maybe not the most reliable indicator. Maybe it's VIX in the high beta stocks of high, you know, spikes in volume in high beta and in volatility of ARC or technology. Maybe that's the signs of correction. You always want to be aware of ABC pattern, right? If you have a fear of missing out, and you don't buy the entire Amazon position, buy half of it, because you know, even if this is the beginning of the bottoming, more often than not, you do have ABC patterns. So on the C pullback, you can put your second half of the position, right? Because usually what happens, you go all in on A, you know, B, you know, on the start of the B, and then you have a reversal, and then people capitulate, right? At least that's what I do often, right? So I'm aware of ABC. It does happen more often than not. That helps me reducing that position size, and right, that's more, it's a mental exercise. Wait till end of day to make trades. Do not go short. I know right now my favorite strategy is, you know, selling, you know, on Disney, right? We had earnings on Disney. So I sold 121 call, right? I sold 121 call going into the earnings. Again, don't stay short, buy out of the money call. Maybe depending on the account size, maybe 140 is too much, too much of a risk, right? Not that Disney can move 20% in earnings, but it's possible, right? It's always possible. So maybe you buy 130 call, but you don't want to stay, you don't want to go naked. Even though a lot of people, and actually on CNBC, I see these examples of trading where they do ratio short spread, or they doing, cash secured put. In this environment, I would, my personal opinion, you're not gonna, one thing from psychology point of view, what's important, for me mentally dealing with high uncertainties, do not try to call the bottom. We all want to do this. I want to do this. You want to do this. Every CNBC contributor want to call the bottom. Realize whoever calls the bottom, it's a 50-50 chance, right? It's just shooting in the dark, right? So it's impossible to call the bottom, but you can look for signs of bottoming process, right? What's happening today and hopefully, Monday, this is signs of the bottoming process. That's important to do, because then you can look at the risk versus reward and say, listen, there is limited risk on the downside, but there is a lot more reward on the upside. So do not call the bottom. Look for signs of bottoming process. And again, rules, concentration. Don't buy Amazon, Microsoft, and Apple. As a 3 position, 2.5% concentration, or even JP Morgan and Boeing, and because there again, high correlation, you're going to be overly concentrated. So concentration is important to always keep in mind. Avoid trading on emotions. If you only buying today because everybody is buying, kind of this herd effect, then maybe that's not a good reason. If you're buying because ARK reached extreme volume and extreme volatility, and you buy an ARK because you feel like we have the signs of capitulation, okay, then you can buy, right? But don't just buy because everybody else you hear on the news to buy, right? Then you want to avoid that. Revenge trading, right? If you're down 20%, you don't want to be down 40%, right? Do not chase the trade. Let market come to you. And this is Osama's special. Be aware of earnings date, right? We'll call it Osama. Earnings. If Disney announcing earnings, you want to look at your Disney position. Maybe you want to do a cover call. Maybe you want to do mirrored put. Maybe you want to hedge it. But be aware of earnings date when you trade your positions.